Welcome to What's a Market? Hi, I'm Mrs. Ross from TJ, and welcome. This video is intended to give you the personal touch when it comes to understanding markets. As the slides progress, you will hear, write, and watch examples of where markets exist in order to better comprehend them as a concept. Markets are where business gets done, so let's get down to business. First of all, let's make sure we understand what economics is. It's the study of decision making, whether it's production, consumption, distribution, or wealth. We make decisions all the time, and especially in a market. Those are economic decisions. Let's wake this guy up and do a quick review, just in case you missed it in class or just need a little reminder. There are 7 principles that guide all of economics. Principles are like rules that guide behavior. Sometimes I call them the mighty 7. It starts off with scarcity, unlimited wants, limited resources. We make our choices, but we can't have everything, so we have to make sacrifices. Economists call those trade offs. In order to make the best of these decisions, we have to evaluate the costs and the benefits. Benefits are way cooler, we want more of them. We have to make sure that it's worth the cost. Thus, we have to think about the incentives. Incentives matter. What motivates us matters. We want more cool stuff, less bad stuff, so we have to take that into consideration. Also, most of our decisions are actually just adjustments of prior choices. Thinking of the margin is how we refine life. You didn't just all of a sudden decide to wake up one day, but you might sleep in one day or you might get up early. That's thinking at the margin. The last 3 are like this. Trade makes people better off. We could make everything, but why? Markets coordinate trade. Walmart might be the place you hate, but you go anyway. Future consequences count. Eventually, everybody pays, even the stuff you didn't choose. That's what my parents told me. Now, in this lesson, we're mostly going to be looking at trade makes people better off, but really, we're going to be looking at markets coordinate trade. So here we go. Intro to markets. If principles guide our behavior, what behavior are we talking about? And of course, markets. What are they, and why do I care? A market is any place where sellers of particular goods and services can meet with buyers of those goods and services. It creates the potential of a transaction to take place. The buyers must have something they can offer, money, labor, in exchange for the product that the sellers are selling to create a successful transaction. Now, I'm providing a link to this article down below. Here's another way to understand markets. It's a video by We the Economy, directed by Morgan Spurlock, called Caveonomics. Morgan Spurlock is the Super Size Me guy. So it's pretty funny and great examples of buyers and sellers. Now it's economic model time. Please get a big piece of paper, and we're going to be drawing a model that's going to show the relationships between people, buyers and sellers, and their exchanges of goods, services, and money. Here we go. Here's a circular flow model. Go ahead, pause the video. I need you to draw the 4 boxes and the 8 arrows. Go ahead, pause the video. I'll wait. Now that you're ready to go, welcome to the circular flow model, one of the favorite ones of all economists. We're going to first start with number 1 box, the households. These are people who cohabitate or live together. They can only afford what they need by renting or selling their factors of production. On the opposite side are the firms. These are the people who are making stuff, or anybody or company who uses the factors of production to make things to sell or to provide paid labor in the form of services. Now, the way that they get that is through the exchange of land, labor, and capital, which originate with the households. Do you remember factors of production? Lumber, workers, and real estate? Stuff that you can be paid for in order to earn the money in the form of wages, rents, and profit from sales. Now, how does that happen? They go through something called the resource market, where the exchange actually happens between households and firms. Once upon a time, this was definitely more of a place to go, and you can kind of still see it in the form of labor ready when workers go for a day for a shift that they get paid that day, and companies call up labor ready to hire those people. Most of the time, this stuff happens online, behind the scenes, so it's tough to see. In any case, the land, labor, and capital eventually make it to the firms, and they pay for it. Notice there's an extra dollar sign. Each player wants their piece of the pie, so the resource market has to get paid for this exchange. Now, in this top part, this resource market, households are actually the sellers. They're the ones who are getting paid for giving up land, labor, and capital. The firms are the buyers. They're willing to pay money for the land, labor, and capital. So that's one market. Once the firms get their land, labor, and capital, they make something. Then they package it, send it off to the product market. Because we don't really buy stuff from each factory, do we? We go to a store like Hy-Vee, Walmart, Five and Below. That's where my kids like to go. In any case, the final products go to the product market in exchange for money. And of course, you see the extra dollar sign because the firms want to make a profit too. Now, what does the product market do? They sell their stuff to households. The final products eventually are going to make their way to households, and the people in the households are going to pay premium prices. Now, in this case, in the bottom, the roles have switched. Households are the buyers, they're giving up their money for the final products, while the firms are the sellers in hopes of making that profit. Now, this is an important concept, both of these are, because you're going to be playing eventually a big part in both of them. Most people really get it when they get a job, and so then they go and they get a paycheck for their labor. This also covers anything you're going to be after high school. So eventually, if you become a veterinarian, a policeman, a cosmetologist, you're going to be playing a big part in the top and the bottom, the resource market and the product market. In reality, markets can look like a lot of things. They can look like this. Here's a diagram showing from farm to table, where basically from the farm goes through different collection centers, different ways of transportation, eventually through the distribution center, which is the resource market, into the retail store and the customer home. Now, here's another market. It's called the New York Stock Exchange. Eventually, you guys will learn about this. This is where shares of ownership in corporations are bought and sold by regular people and other corporations with the hopes of eventually selling it for a profit. This store is coming to town too. Bath and Body Works and Old Navy, they're going to be moving in, and this is a market. Now, we'll have it in a strip mall, but you guys have already been in a regular mall too. Those are markets as well. To paraphrase Adam Smith's theory about free markets, if buyers and sellers are allowed to act in their own self-interest, they, the buyers and sellers, will come to an agreement quickly and efficiently, as if guided by an invisible hand. Nobody told you to go buy stuff, but you did it because you needed it. Sellers are only going to sell what the buyers want, and that's how things come together. Or is it because Kim Kardashian has one? I don't know. Markets are everywhere, digital and otherwise. Thank you so much for watching this video. If you have any questions, you can email me. Also, you can find the links to the article and video in the description below. Next step, demand.